market, okay, US market. Okay, so what happened to US market? Okay, don't need to talk, just show one simple chart. Okay, I don't have candle, I only have one straight line for you. Right. Okay, I don't for me, I mean, of course, candlestick is one way to look at the technical analysis, but for me, I just want to look at overall trend. All right, and very clear cut over the past 1 year. If you buy US stocks, okay, S&P 500 is up by 30%. Right, continue to hit historical high every, I don't know, maybe 1 to 2 weeks. You will hear that S&P hit historical high again, historical high again. Okay, I think probably has hit 20 over historical high. Okay, within the past 1 year. All right, so a lot of investors ask us, okay, Louis, all right, can I still buy US stocks? Okay, should I buy when it's at a historical high? All right, I'll share my view. Okay, that's a quick one. All right, for US market, I think generally, even is at a historical high, based on historical return. Okay, if you buy at historical high, okay, you still get this kind of return. Okay, over the next 3 months, 1.5% return, 6 months, 3.9, over the next 1 year, 9%, over the next 2 years is about 18%. Okay, and this is showing the comparison versus if you invest on the other days, not at the historical high. Most likely, whether you invest at the all-time high or other days, you still see very good return. Okay, so generally, based on historical numbers, US market should continue to perform well. All right, and of course, fundamental point of view, of course, we should not just look at trend. All right, I also look at the valuation. Okay, whether is it expensive to buy now. There are two numbers I think to show you. Okay, and a lot of people know that in the past 1 year, the US market is in the bull run mainly because it's driven by the Magnificent Seven stocks. Okay, of course now 4 of them continue to move up, the other 3 actually move side or start to drop, right? But generally, they are still the one that's moving the market. Okay, so one way to look at the market valuation is you use PE ratio. Okay, so PE ratio for this Magnificent Seven stock versus the other S&P stocks is actually as a bit expensive if you based on price to earning ratio. Okay, that means if you buy the Magnificent Seven stocks, you are paying 1.7 times more expensive as compared to other S&P stocks. Okay, it's definitely expensive. But don't forget, when you buy this kind of, if you want to buy this kind of Magnificent Seven stocks, you're not buying based on their current earnings. You're buying them because you believe that the earning continue to grow. All right, that's why there is the other factor, all right, which I think is more accurate to show you that whether the stock is expensive or not, is using this called PEG ratio. Okay, price to earning divided by growth rate. Okay, yeah. So if you add in the growth rate of these stocks, right, the valuation is not expensive. Okay, the Magnificent Seven stocks is still not expensive if you factor in the growth rate. Okay, so one thing we can draw from this valuation is, number one, it's not expensive if you want to buy those so-called the Magnificent Seven stocks like Nvidia, all this, which I think Kelvin is going to show some chart later. All right, it's not expensive, but whether we'll have any pullback is really depending on whether they can continue to maintain the same growth in earnings. Okay, if suddenly once they release quarterly earning, they start to report slower growth in earnings, then you will start to see the market to pull back. Okay, because people are buying because of growth. Okay, if the growth start to slow down, you should see that the market start to pull back. Right, but generally I think will remain strong at least for this year, okay, for US market. Okay, and of course, if you talk about US market, you cannot avoid talking about this interest rate movement. All right, and of course, beginning of year, I mean, people are talking about rate cut, and then probably the end of January, February, or even March, people say, hey, there's no rate cut yet. Okay, how come? Okay, how come there's no rate cut? Right? Yeah, but the latest, I mean, if you are watching the market, you should know that the Fed is actually signal that there will be a rate cut this year. Okay, I think they are talking about 3 rate cut, and also market is predicting that the first rate cut likely to happen in June. Okay, yeah. So rate cut is there. All right, it's still the base scenario for the market prediction. Okay, but this one will more affect about the bond market, not about US market, because irregardless of whether there's a cut or there's a hike for interest rate, US market continue to move higher, right? So if you're talking about US stocks, okay, you don't really need to worry about whether there's a rate cut or not, right? Yeah, so that is the situation. Okay. Yeah, so over to you, Kelvin. I think you have some chat to share, right, about your view on the US market.
Yes, hi,
Yeah.
I'm back again. All right, so US market, I personally only look at two of the majors, which is the Nasdaq and the S&P. So I've drawn just a quick one on the Nasdaq chart. All right, if we just to zoom in a little bit, okay, let's say when we try to put what we learn into practice, over here, can you see this where I'm pointing? Right, this hand. All right, actually, when we reach the resistance, did we see like a bearish engulfing? Okay, we actually saw a bearish engulfing, and then we actually started to see it come down, right, to this support, to this very strong support that around 17,700 that kind of refused to break. All right, so we have to respect that. Although we see this very long bearish engulfing, all right, but it didn't manage to go down as much. But remember, like I say, all this is technical perspective. All right, it's a certain chance of probability also. Right, doesn't mean you see this means that's short all the way down. Okay, it's not that easy. Yet at the same time, it's not so complicated. Okay, so after that, actually bounce up. All right, right now, yesterday also actually we saw a little bit of a bearish engulfing. Okay, so we might be expecting it to actually start to taper off. Okay, the Nasdaq, as year to date, as we can see, it's actually been moving up quite strongly already. So you wouldn't be too surprised if we see, let's say, some pullback. A pullback is healthy. We need this pullback. All right, it also actually has reached the parallel resistance. So over here, around 18,388. All right, you can see it's quite a significant, strong resistance. All right, so whenever it hits here, we might see it move down here. All right, back to this testing of the 1778. All right, over here we want to see whether it can still continue to go down. I'll be happy if it does. Hopefully you all feel the same way. All right, it might be very contrary to popular belief. I want it up. Okay, when it comes down, okay, that's where I think I would consider to go in. All right, if you are scared, if you need someone to hold your hands, always call the advisor. Okay, you need somebody to wake you up, because when it comes to here, right, you might hear a lot of news out there. Oh, there won't be interest rate cut, or this and that. Right, you might be a little scared. Okay, so all of us are more trained, so hopefully we can help you to alleviate those fear. All right, so if it can even come down to here, I'll be very happy. 17,200. Right, 17 here. I think that's where we can start to jump in even more. All right, so this year when there's pullback, I wouldn't be too afraid. I would say it's a bit more on buy on dip kind of situation. Okay, why I put here the ultimate resistance, or where we'll be looking at for this year at least, I think we could be looking around 19,000. Okay, so from the start of the year, we can look at about 18% this year. Later, I'll just show a slide. Why do I think it's 18%? All right, firstly, there's some technical behind it. All right, you can see the chart. Oops. Ooh, wait, sorry. All right, we can see the chart. Right, over here, this parallel line is one resistance, and later I'll show you is another slide why we could actually be looking to end up here at the end of the day. So it comes down here, it might hover, might do a fake break, and then it starts to regain and move up for the year. Okay, so hopefully take some pictures, take some of this. These are the support lines I'll be looking at. I'll be letting people know when there's a good time to enter. Right, S&P also, same thing, is also in a bit of a consolidation mode also for the last few days. You see, it also doesn't really move as much. Compared to Nasdaq, this is slightly weaker. We can see if it really breaks below this, right, first support, usually round number, you will see around 5,100. All right, then next time, the next support is 5,000 round psychological number. Same thing, we're looking to end the year up, all right, on this higher resistance channel, okay, which is around 5,600 points. Okay, it represents also around 18% from the start of this year. All right, so why do I say 18%? Okay, what happens after a 20% gain? I know last year was massive. All right, you can see the US market went up. So whenever the first year ends up more than 20%, after a 20% gain, we can see next year, the next year, it kind of actually goes up. All right, see average, yeah, you know, you can see about the earliest year, you can see about 22, 23, some years 20%. So round about from the start of this year, if we give about 18%, right? So we can actually see just nice. The technical also help us to reach around there. Okay, so these were the points that I will take note. Hopefully the market will end up there. So any pullbacks that comes, you might want to talk to your advisor, see how y'all can jump in, see how y'all can start to get in to this. All right. So this is just a little bit more words. Okay, it's up 22 out of the 34 years, 65% after a gain. All right, you actually see it move up. So if you're actually betting for the market to go down this year, you are actually on the 35%. So the question is, do you want to be on the 65% or do you want to be on the 35%? For me, I'd rather go for the greater possibility, which is the 65%. All right, at least the odds are with me if I was to go long. Okay, and these are all just the stats. You can see, I won't read it for you all. Right, and so pullback, if you see pullback, don't be so scared. Oh, we're going to crash already, or my friend tell me crashing, or the uncle tell me crash, everybody tell me crash, media tell me crash. Okay, that's where you can't find us. We paint you a slightly different story, hopefully. All right, so volatility is the toll we have to pay. So the market moves up and down. Everybody knows that the market goes up and down, up and down, up and down. All right, no such thing. The market go up like that. It's very unhealthy. Nobody can jump in. All right, so a 3% dip about 7 times a year is very normal. 5%, all right, 10% once a year. I'm really hoping that we can get at least a 10%. Right, then things a bit cheaper. Okay, you like to buy a bit things on the cheaper side, right? A bit of a sale. Okay, so hopefully for 10% we can start to scale in a little bit more. All right, 15% only once every 1.5 years, and we can see actually the last few years it already happened about 2 times already. In 2022, 2023 already happened the 15%. So for me, I would say this 2 scenario is unlikely. Okay, of course, not counting any black swan event, anything that suddenly comes in, suddenly another war or so, which nobody can predict, or another COVID 2024 or something else. Okay, the Singapore flagship that hit the, unfortunately, that hit the bridge, I think it might cause some, inflation pressure. All right, market could take the chance to actually sell down because they have to repair the bridge. The bridge is actually very important. Supplies cannot get through and there. All right, this could just cause some knee-jerk reaction. Ultimately, they should get the bridge up. They can fix the bridge. All right, so the market can start selling with this kind of reason, which is good for investor. All right, don't be scared. Okay, so bullish case. Why also bullish? We can see actually this year about 6 trillion in MMF. All right, that is starting to still grow. All right, and when people realize, hey, the market's running away without me. Okay, some people might have FOMO already. All right, FOMO. Okay, with this 6 trillion, all right, if they'll start to go into the market, all right, that's why you see so far it's been very resilient because the market come down. People might start to go in because, hey, I missed it, I want to jump in. Right, so we haven't seen the market even dip any 5%, about 3% only. So if there's more, all right, the funds will start releasing and then start going to the market. That's why it can hold the market quite well. All right, NVIDIA, right? Why I just flag this single stock? Because this stock has been the top of the town for the last 2 years. All right, this is came up from since like $200 all the way. All right, and this is because of the whole AI team. Right, this has been leading the market. But currently, we can see actually over here, you can see what we studied just now, a bearish engulfing, like Nasdaq at that bearish engulfing, came down, support level, cannot break. Right, it start to go up. Then right now we have actually a bit of a double top pattern. All right, this also just now what we studied, shooting star. All right, hopefully y'all can identify it a little bit better. Right, those C stars. Okay, then after that, there's another bearish engulfing. All right, so the technical signs are there for a bit of the pullback. All right, so but this all could be a bit man-made. Okay, everybody sees it, but if you were to ask me, I think we could start seeing a pullback. Usually a double top here, hit here the resistance, it should start making at least a move down. Okay, so everybody's watching this chart. This chart is like holding on to dear life. The moment you start coming down, you can see the market all starting to sell. All right, it's healthy to take profits along the way. So another 843 will be a support. All right, it could, if the selling continue on, the momentum is strong, we could actually see head to 772. All right, right there, you need to take note already. Okay, I think here you could see a nice consolidation or so. Then that's where you can consider some entry. All right, this is SOXX. All right, this is a semicon ETF. All right, semicon has been quite hot recently. If you don't know how to choose stocks like Nvidia, I don't know, so many, or you as an individual selection, all right, there's always that risk, all right, of one stock. Okay, so you do bad at risk, or you don't know which is better. Well, can Nvidia move faster? AMD, is it move faster, or is it ASML move faster? Which one will move faster? All right, so sometimes ETF help you spread that risk. All right, it actually contains all your top semicon stocks. All right, so we can see this one, the ETF, that if you're interested in the semicon, if you believe in the whole AI revolution, all right, and you don't want to like be stock picking, okay, because it's too much to go and read out all the fundamentals. All right, this is one easy way to get into the market. Of course, it will not move as much. All right, but when it comes down, also you want to protect your downside risk. All right, so it goes up, it's coming down, because Nvidia is one of the biggest in it. So if we can actually come down over here, all right up to the 50 MA, 50 moving average, 212 is also another support level, followed by 200. All right, so we always look for round number psychological support. Okay, what's inside this SOXX? Okay, this is actually held by BlackRock. Okay, so number one holding is actually Nvidia, holds about 10%. So these are your AMD. These are all your very common and well-known name. Intel. Okay. Okay. Lam Research. ASML. Okay. So if you afraid to get into the individual stock, want a broader base, you can consider an ETF. All right. The last chart. All right. The last thing I'm going over, crypto is also been heading up recently. A lot of people have been asking how and what. All right. We've also been discussing this since last year. What about crypto? These are the key points to actually just take note. Bitcoin halving. I explain a little bit. All right, what is actually about halving? Okay, it just takes place. It's going to take place in April. I think around kind of 17 or 20. It's coming already. All right, you can actually just Google when. Okay, the explanation of it. What is this halving? You can be hearing. I think everywhere you see on TV is really about the supply of the Bitcoin. All right, the miners that go in to mine the Bitcoin, all right, every 4 years you actually be half. So for example, 1 year maybe can be 1,000, or in a day can be maybe 100, for example. All right, come April, we will be 50 only. So the miners can only mine 50 coins out. Thereafter, when they have hit a certain target, it will halve again. So when they calculate it, right, it's kind of every 4 years. So the next halving will be at 2028. So instead of 50, the miners that go in, instead of 50, it'll become 25. All right, in order to mine the Bitcoin, they have to actually create this whole chain thing. All right, the miners have to create a code, very high energy to try to find it. Then a Bitcoin comes out. All right, this so there is only a finite supply according to the Satoshi guy who created it. Okay, so this, because of this halving, we usually result in the higher price of Bitcoin. Okay, one more thing for crypto. All right, it's also awaiting the Ethereum. It's like the blue chip, second line. Okay, the ETF approval. Right, since Bitcoin was approved, I think that brings a lot of legitimacy to it, a little bit more regulation. So now it's a little bit more mainstream. People are not so weary about it. So that helped Bitcoin recently. Okay. Just also know that since it's Bitcoin, all right, our MAS also has come in to give caution. All right, don't go all in, don't go crazy. Remember your proper allocation. Speak to your advisor if you need to. If you are interested, what's the right way to get in? Don't tomorrow all in. Well, because this guy say good. All right, go and have a sit down, have tea, talk about it. All right. So this is a Bitcoin chart. All right. Why people have been saying 100,000 or so, we can actually see why. All right. If you use a bit of the trend line, use a bit of a Fibo extension. All right. So 74,000, we can see the new high, that around 74,000 that it made. Okay, usually after a new high, it actually pulls back. okay, starts to pull back. Okay, pullbacks are good. When it pull back, it also can be fast and furious. Around 64, 65,000, once again, found support and start to bounce up. It might challenge 94 once again, kind of a double top. Okay, and hopefully it breaks before even the halving and start to move up. And when the halving comes, they usually say sell on news. And so we can see actually Bitcoin has been running quite a bit. So when the halving comes, I think it might be a chance to take profit. But ultimately, we could still see it move up to close to even 100,000. See, so this is 94. All right, we could actually see it possibly move up there. When it will happen, I'm sorry, I cannot exactly tell you when it's going to happen. When will it hit 94? I wish I could tell you, but yeah, it's anyone's guess. But hopefully, I'll say by this year. All right. Okay. What happens to the last two? Oops, sorry. Hey. Sorry, I thought about the halving too excited already. Okay. So the last two halving, all right, in 2016. Okay, I'll just go back to 2020 first, the last 4 years. Right, it was 9,000. So it took a while. All right, doesn't mean once you immediately half, you already. Okay, it takes a while. It starts to go up. So from 9K to 68,000. Right, then the previous time in July 2016, it was around 700. Nobody really kind of knew crypto a bit. Is this scam? Is this what? Okay, from 700, 18,000. How many X? This one you can calculate yourself. But what you can see actually, it kind of from 700 to 18,000, from 9,000 to 68,000. You can see the multiplier has actually come off a little bit. Okay, so right now crypto is 70 plus thousand. Even if it's 2 times, 3 times, 200, you won't see crazy kind of gains like that. Right, because now it's becoming a bit more mainstream. The price is a bit more expensive. You won't see it so crazy kind of jump. All right, so please manage your expectation, and please also remember, as you can see also after halving for 2016, it took a while. All right, 1.5 around, for it to go up so much. You can see from here 2020, it's a bit shorter, the journey. All right, now 2024 with a lot of social out there, people are promoting it, people are talking so much about it, so you can see maybe it can actually accelerate the gains. All right. Okay, so yeah, you can't change the past. I mean, if you miss those gains, there's still the future. So look forward into the future. Don't be too sad. All right, speak to one of us. Okay, there's still chance. There's still something that we can be doing. All right, so hopefully you gain something. I'm going to pass the time back to Louis.
Okay, so Kelvin very excited to share. That's why he keep talking until crypto. Okay, but it's only a US market. Okay, but doesn't matter. It's okay to jump here and there. Okay, yeah, no problem. All right, yeah. Anyway, it's market talk. Okay, so it's more free and easy kind, right? So it's okay. You can come to talk, and then audience, right? You should ask question. Okay, don't be like just me and Kelvin talk to each other. Okay, we see each other almost every day. Virtually, not physically, but it's with market talk, so it's actually for us to talk. Okay, not only two of us. Okay, but maybe just to touch on a little bit on the Bitcoin part. Okay, I'll share my view. Okay, I'm not really a very big believer into this kind of cryptocurrency lah. Okay, the reason is very simple. Okay, if something that I don't understand, I won't put a lot of money. Okay, if I don't put in a lot of money, if I put in like $100, $100, even if you give me 10x or even 20 times kind of return, my life will still be the same, right? Won't be able to retire. Okay, probably I can go for a nice vacation, or maybe I'll go for a nice restaurant, but it won't change my life. All right. So if it's something that I won't confident to put in so-called sizable of my capital, I'll rather skip or just ignore. Okay, but as an advisor, we can't really ignore when people come to us say, should I buy Bitcoin? What should I do? How to buy? Right? Yeah. So for me, it's very traditional type of investor. If you really want to invest in Bitcoin, my suggestion is also don't put too much of your capital. Okay, unless you really a strong believer, which I don't see a lot of people. Okay, maybe less than 1% are very big believer in typical. Right? If not, you can try a little bit. It's fine. all right? And how to invest? The easiest way is go through ETF. Okay, and these are the ETF that you can invest that have a direct exposure to Bitcoin. If you ask me which one, all right, I probably will choose the fund issuer that is more familiar with, which is BlackRock. Okay, so iShare Bitcoin Trust is one of the ETF that you can invest to get exposure to Bitcoin. Right. But again, all right, cryptocurrency, the volatility is a lot higher than your stocks. Right. I mean, like just how Kelvin shared that, every 2 to 3 years there is a 20% pullback. Okay. And that is actually considered like could be one day movement for cryptocurrency. Right. So please be aware. All right. If you're ready to invest in Bitcoin, please do your own risk analysis or talk to any of your advisor. Right. Yeah. So if you stay until end of this session, right, we are going to do a pooling. All right. Not pooling of money. Okay. Is to do a sampling. All right. We'll ask you, out of this market, which market will you invest? Okay. And now we are almost more than 100 packs, 100 people in this live. So later on, you'll just share. Okay. What will you invest if you can only invest in one market? Okay. So now, Bitcoin US market, we have shared our view, and now move to the other market, which is of course the market that a lot of people don't like to be in, right? Which is China market, Singapore market later. Okay, so China market also have one chart. Okay, just one line, one chart. You will know that you will not want to be in this market because over the past 5 years is like this. Okay, and how to track entire China market, because China there are so many exchanges, some company listed on US, some different kind of exchanges. So the best way to give you the idea of how the China market is moving is using this 2801. Okay, it's MSCI China ETF. Okay, I think they have about 600 over Chinese company, right? Can be listed on US, China, Hong Kong, right? All these will be inside this ETF. Okay, so obviously it's not definitely not a good market. Okay, but now over the past few months, okay, since end of January, actually end of January, we start to see some recovery from China market. Okay, if you really measure what is the return, all right, it's up by about 11 or 12% in about 2 months time. Okay, so it's about 5 to 6% recovery per month. Okay, if this continue, that is like 50 to 60% per year recovery. It's a very strong recovery, right? Of course, recently start to have some pullback, right? So should you enter, should you exit? I will share with some fundamental point of view. Reason of the strong recovery since end of January is very simple. Okay, if you want to invest in China, you must accept that a lot of things is out of control, right? It's not just about profit, company earnings. It's a lot relying on how the policy is doing. Okay, whether it's supportive, is it restrictive, right? Yeah. So the good news is, since end of January, we has been hearing a lot of good news from the regulator. Okay, whether it's a central bank or central government, okay, they are doing a lot of stimulus to support the economy. Okay, and even the Xi Jinping also said to discuss with China stock market regulator to see how it can improve the sentiment towards China market, right? So all these news are positive news. That's why the past 2 months up by about 11 to 12% for China market. Okay, so I believe this thing will continue. Okay, as long as the sentiment able to change, I think this recovery should continue. Okay, so of course, if you do some research, okay, because we do monthly research, there are a lot of so-called data pointing towards that. The national team, okay, which is those state-owned enterprise, state-owned companies, start to buy a lot of their own the onshore share, right, which is Chinese share. Okay, so it's showing that a lot of support money pump into the market, right, to support the stock market. Okay, so that is the other positive news. A lot of funds flow back to buy Chinese stocks. All right. And of course, the other way we look at it is valuation. Okay. And of course, this one, if you look at any kind of a valuation measurement, right, is nearing to the lowest valuation level for the past like 10 years, right? So China market is definitely cheap. I mean, if you look at chart, you know it's definitely cheaper as compared to US market, all right? Yeah. So whether you're using P ratio or PB ratio are all pointing at the lower end of the valuation. Okay, so China market is cheap with positive news. Okay, that's why it's a good market that you may want to have some exposure as well. Okay, Kelvin, I'm not sure whether you have any chart you want to share. Okay, or for Chinese market, it's all downtrend. No chart to show.
I can share for market. Let me. Hang
Maybe just a
Seng,
quick
you want
one.
to look at
That's
Hang Seng?
5 minutes. Yeah, Ken.
Hang Seng, okay.
Yeah, Ken, Hansing.
You see,
Yeah.
let me just blow it up. All right. Can you see the Hang Seng? Okay, this is the Hang Seng chart lah. So when you talk about China also, we usually talk about a bit of. Sorry, my mouse. Okay, over here, recently we can see actually it kind of hit a bottom already. All right, you can see it moving from a bottom. As you can see also the candlesticks also, what I mentioned earlier on, the bit of a bullish harami also inside here. Okay, you can see it starting to trend up lah. All right, which is important. All right, it's also you can see that the moving averages are starting to actually expand out. All right, the 25 and 10, these are the short-term one. As you can see, kind of healthy recently, moving up. And over here, you know, yes, actually hit this resistance a little bit. I wouldn't say consider a double top. All right, at 17.2. Okay, recently you hit here, and then it started to taper off again. What's not so nice, it actually broke this uptrend line, this short-term uptrend line. Okay, which could actually signify a bit of more downside that we could see. But what's healthy and what we like actually is firstly, like what Louis said, there's actually more stimulus coming in. The government is a lot more serious already lah. All right, I think now they're all talking and they don't want to restrict so much. All right, they are really trying their best to get this whole market out of the rut. All right, so we can see actually it's making a higher low. All right, every time it moves up, it goes up higher. Okay, so that's a healthy sign in terms of technical perspective. Right now, it's actually still okay. All right, so long as this like 16,000, all right, it gets defended. All right, you cannot see a smash through like big red candles smashing through back to 14.8. I think then we'll be quite in trouble. All right, but if we can see around, you know, don't be surprised if we come down to 16,000, starts to hold here. All right, we can see the indicators also from overbought. All right, it's starting to slope down. If you can hit around the mid range or even go to oversold, I think we should really take notice of this market. Don't neglect it. It should also still constitute part of your portfolio. How much of it, you also need to talk to your advisors to help you to properly allocate. Right, the reason being also, why do you need to take on this kind of excessive risk? You could just put in somewhere safe. All right, why you want to take the excessive risk? Work it out together with your advisor. Is it necessary, or do you even have to take even more risk in order to reach your financial goal? All right, so take note of this. I think this year also we are still looking at Hang Seng to be positive. All right, we could even still regain the 18,000 footing. All right, that's all for TA side.
Okay, yeah. So the best word I want to hear is positive this year. Okay, that is something that everyone want to hear. Okay, yeah. I think generally, I think this year, that's what we always say lah. I mean, if you are comfortable to invest in 2022 and 2023, you definitely are even more comfortable to invest in 2024. Okay, because most of the news, the indicator, the interest rate, all are definitely in the better position as compared to 2022 and 2023. Okay, yeah. So so that is the China market. Oh, yeah. Then how about Singapore market? All right. Also the market that most of us don't want to be in, but unfortunately, I believe. I mean, if you ask us, we are servicing more than $5 over client. Okay, most investors, if they buy stocks, the first mark of not even stock, like even investment in unit trust or ETF, the most the market that they want to start with is always Singapore market. Yeah. So Singapore market again, okay, one simple chart to show you, right? This is not 1 year, okay, this is all time. Right? All time meaning since 1993 until 2023. The historical high for Singapore market is here. Okay, how come so many lines? Okay, so I won't see so many other. Oh, so some got rainbow color some more. Yeah, historical high is here. Okay, 2007 around September period. STI hit 3,000 point, 3,100 point. Okay, after that, since 2007 until 2024, 17 years. Okay, 17 is 17? Yeah, 17 years. So we have been waiting for 17 years. STI never hit historical high. Okay, in fact, for the past 10 years, once it hit 3003, 3004, it always bounced back. Okay, so what happened? Okay, you asked me, I also don't know. Okay, but what I can share is you can see that the Singapore market STI component, right? The top three holdings, the three banks. Okay, actually Singapore market is not moving, but the banks are doing very very well. Okay, because a lot of people like to park money in the bank, do nothing. All right, so bank make all the profit. Right, so if you add up all this, is about probably 50%. All right, 50% STI is rely on these three banks. Okay, so if you buy banks, I think you are doing well. All right, but if you buy other than banks, STI in general are still moving sideways. Okay, so there is no, like, very high growth company that able to penetrate to become a blue chip lah. Right, it's still the very traditional kind of business. All right, and the other bad news that um, so-called we not say we, but this is, I think, for SGX, not SGX, I think someone did a research. I can't remember who. I think Business Time. Okay, yeah, so they did a research which is very alarming when I see this analysis. 10% of Singapore listed stocks are suspended. Do you know how sad it is? Out of 630 company listed on SGX, 61 stocks are currently suspended. All right. So it's about close to 10% Singapore listed company are suspended. Okay. So if you pick Singapore stocks, there's 10% chance you'll pick a stocks that will be suspended. That is a very sad thing. And this is a fact. It's not that I curse anyone. Right? It's very unfortunate. Okay. Yeah. So of course, I mean, this is historical data. Okay. I mean, I'm not saying good or bad, but it's what has happened, all right, to Singapore listed company. Okay. Yeah. So that's why if you ask me, for Singapore market, very unlikely, I mean, not say unlikely, but it's very low chance you can pick a very strong growth company. Okay. I mean, if you want to pick very strong growth company with a very high potential return, you can't pick those blue chip. Blue chip, yes, maybe stable a bit. Okay. Not all blue chip are stable. Some actually also decline. Right. But you want to pick like those stock can give you a 10 time, 20 time kind of return. You have also a 10% pick into the wrong one. Right? So to me, I'd rather be more defensive when come to investing in Singapore market. All right. And of course, the one thing that I think Singapore market can still be investable is because you can find good dividend stocks. All right. So to me, if I want to invest in growth company, I go for overseas market. Okay, China, US, or global other country. Okay, I think we are likely to find good growth company there. But if you want dividend, I think Singapore is still a better market that you can invest in. All right, and you can see that this is a so-called stock with more than 1 billion market cap, excluding REIT. Okay, this is the percentage of dividend. Okay, and you can see the top 5 dividend yield for this big cap. 3 of them are banks. Okay, so if you like dividend stocks, you definitely have to choose one of the bank or the bank stocks. Okay, yeah. Small cap, yes, you can find this company on the right. Okay, also give a good yield, like above 6% kind of yield, right? But these are the smaller cap, right, kind of stocks that give you good dividend yield. And of course, dividend, you cannot avoid talking about Singapore REITs, okay, which is the popular investment pick for most investor in the past. Okay, they always say, invest in REIT cannot lose money. Okay, that was in the past. Okay, nobody dare to say now because REIT also got affected, and in fact, I think if you calculate, also got 5 or 6 Singapore REIT suspend dividend, suspended, also happened to Singapore REITs. Okay, so also be careful. Doesn't mean buy REIT confirm make money. All right. But we do analyze, provide some data as well. Okay. And I mean, if you look at historical data, right, what we are showing here, potential upside is all in green, is because Singapore REIT are actually trading at lower valuation than historical average. Okay, so if you take a snapshot now for all the Singapore REITs, they are all undervalued. All right, they are trading at lower valuation. Okay, and the more reason is because of the interest rate hike. Right, that's why all are declining. Okay, but don't just rely on fundamental, the historical data, because some of them, like for example, Manulife rate, if you want to see 400% kind of return, I think they have to restructure the entire rate. All right, it's quite impossible lah. Okay, so we don't want to just buy because of these numbers. Okay, if you ask me, I will prefer those good quality REITs like Fraser, CapitaLand, Mapletree. Okay, these are the better quality REITs that you can consider. All right, and you're still getting quite a good yield, right? Like 6% for Fraser, Logistics and Commercial Trust. The other one I personally like is the Fraser Central Point Trust, about 5+% yield. All right, yeah. So these are some of the REITs that you can add for Singapore market to get dividend, right, instead of capital gain. No. Yeah, so that is my view on Singapore market. Okay, look more for dividend rather than capital gain. For Kelvin, do you have anything to share?
All
I
right.
think you have,
Do you
right?
want to see the technical perspective?
Hmm.
All right. So this is the STI. All right. Like what Louis said, because our 3 major banks make up 45% of the index, so they are the one largely pushing it up. All right. So on a given day, as always is moving, is most of the time the 3 banks are. All right. Then you got a 1 or 2 outliers. Sometimes maybe like Samcorp, sometimes Yang Zhejiang moving, but most of the time you can see actually it's been going up because of the banks. All right. One reason why it actually been moving up the banks, firstly, I think the market was actually anticipating at the start. I think it was supposed to be 7 rate cuts. Then after they reduced it to 4. Then after now they say the recent meeting they say just 3. All right. So I think because of that, the net interest margin can continue to remain a bit higher for the banks. So that's why you see the banks recently has been moving up. I think from what I see the comments also from Chi Hong saying that Singapore property prices has been moving, making new high. All right, but stock market sian because the property market is quite tied to the banks. All right, whenever you buy property, I'll say most of us have to take a loan, or it could be wise taking a loan, right? Good debt, bad debt, kind of thing. All right, so that helps the bank, and that's why you can see our bank's majority is moving up, and with anticipation of a rate cut, all right, that could also actually continue to spur more of a property buying, all right, because our interest rate can potentially move down. You know, those who are waiting can start to go hunting. All right, this is not property advice. This is just some logical kind of thinking. All right, those who are think, well, last time 4%, wow, super shiong. Now we cut down to 3% or 2+%, maybe not too bad. All right, so that's why you can see the banks are moving up in anticipation. Also, of course, your spur lending, spur more growth. So we can see the SCI continue moving up. All right, it actually kind of broke a bit of the resistance, 3250 area, now moving up. Because continue to see it move up journey to about 3285. All right, one resistance here. After that, it also actually a bit of a gap. Okay, after that, it might start to consolidate before it starts to push up to 33 level, 3300 level. All right, so for the STI, like what Louis said, don't expect too much. We could just go back to 338, make a big double top, then start to come down, start coming down, people start taking profit. So our market, as you can see, for at least the one year or so, is kind of a bit of a range bound. Nothing too exciting. All right, nothing that can kind of give you a heart attack or what. All right, so it's actually more stable. Our market is always known as a bit of a safe haven, a bit of more REITs. Like I said, it could be a good time. It's a bit of an inverse now that interest rate might be coming down. most REITs are at the 52 weeks low, so do take a look. Right, my personal favorites also recently has been Maple, Keppel Infrastructure, all right, and Fraser's also. So those are I'm starting to add. And for those who have ESR and Lendlease, I think your dividend should be in your bank by tonight. All right, it's already in my bank, so if, go check it out. All right, whoever had those stocks on hand. Okay, if not, Louis, back to you.
Okay. Yeah, so yeah, dividend. Okay, yeah, it's good that dividend is in the bank account, right? Last time receipt check, now I have to log in to see the money. Okay, that's why every month when I do my own financial review, yeah, so I have to update my dividend tab, right, and keep adding more and more, which is a good thing, right? Yeah. Okay, so now in due of time, I think we just move on to the next market, which is bond market. Okay, the last market, okay, that we want to discuss, but don't go away because later on we are going to do a pooling, right, on the so-called like which market you want to invest. All right. So bond market, okay, how to see bond pricing? Okay, it's a bit difficult because there are so many bonds around the world, right? I think one of the popular one you can refer to is using this TLT, okay, 20-year Treasury bond ETF, US Treasury bonds, all right, and of course you can see that the ETF just dropped by about 50 over percent, all right. Yeah, 50 over percent because of interest rate hike from 2022 to 2024. That's why the bond price dropped. Okay, and this is very sensitive to engage interest rate. All right, when you hear that interest rates start to have cut, the price move up. Okay, and we see that interest rates start to maybe not so don't never really cut so soon or maybe cuts slower. Then you can see the things go down again. All right, yeah. So this is showing that okay, yes, there's some recovery in the last 1 to 2 months. Okay, but still, really need to see the first cut. Then we'll see the continual recovery for the bond price. All right. But again, for bonds, one trend that we observe, of course, okay, I think one thing we need to look at is the current interest rate definitely moving lower. Okay, probably some of you may observe from the Singapore saving bond or even the so-called treasury yield, right? I think this is a trend. Okay, interest rate will continue to drop in the near future, right? And how you can still get a good yield at the current situation, of course, you can put into Philip money market fund. Currently, still give you 3+%, but this one won't last long. All right, once interest rate drop, this should drop as well. All right, if you want slightly higher yield, you must go into slightly longer duration kind of bonds, like UOB bond fund, Eastspring bond fund, which will give you about 4+%. And when interest rate drop, the price should recover a bit. All right, and the 4% will stay slightly longer. All right, because they hold a longer duration. Right. If you want even longer duration, you can go into Pinko bond or the TLT share, right? I mean the ETF, which should also will give us higher yield, and the yield will probably stay longer as well. And also when interest rate cut, you will see a bigger capital gain as well. Okay, because of longer duration, right? If not, you also can so-called invest with our dividend portfolio, with we actually construct based on bond and equity. That will also give you about 6+% with potential so-called capital gain as well. Yeah. So bond market in general this year should be a good year. Yeah, and these are the two sample fund that you can look at lah. Okay, average credit rating AA minus. Dividend yield is about 6.4%. The other one is actually shorter term. Okay, 4%, but the duration is only the average maturity is 1 year. Okay, this one definitely more stable lah. Okay, but the yield will not last long if interest cut. So if you want higher yield for longer period, you go for PIMCO fund. If you want stability, you go for your OB in another SGD fund. Okay, just an example. Oh, yeah. So I think we'll just go to the pool. Okay. In due of time, I think we just go to a pool. Okay, so can you just type in the comment if today you only can invest in one market, right? And only can invest for 1 year. That means 1 year later you want to take back your money. Okay, assuming you are able to take the risk. Okay, we don't talk about I want to be risk-free, risk-free just smart money in the bank, right? Yeah. Okay, if you can invest for just 1 year, which market will you invest? Can you just type in the comment A, US market, B, China market, C, Singapore market, D, bond market, E, crypto market. Only 1 year horizon. Which market will you invest? A, B, C, D, E. Just type in the comment, right? We just want to have some idea. Within 1 year horizon, which market will you invest? Just choose one. Only can choose one. Grace say pay. Oh, so suddenly a lot of answer already. Okay, wow, so many. How come so many answer? All right. Oh, so I can see a lot of people choose A. Oh, so many A, B, D, A. Okay, so I think mainly A. Okay, A is the right answer
Nobody
because I
E.
think 1 year later. Huh? Oh, got people
Nobody
E.
choose E.
See, no choose. Okay, of course, there's no right or wrong answer. I'll tell the
Yeah.
right answer at the end of 2024. Okay. But if you ask me, my personal view, okay, I won't choose one market. Okay, that's for sure. I won't just choose one market. I think other than E, I have all exposure, lah, right? For me, lah. Okay. And if you ask me today if I assess fund, I will look at my overall exposure. Okay. Currently, I think I a little bit more heavy into bonds. Uh, Singapore actually also a bit heavy because I keep looking at stock price every day. I cannot take it lah. Right? Sometimes I just buy lah. Right. So if I want to average now, I want to add on. I'll probably add on my China and bond market. If I only have 1 year horizon. Okay, that's my view. You don't have to follow me. Okay. Okay. So how about next one? Medium term. You have 3 years. So now 3 years later, you invest for 3 years. You are able to take risk. Which market will you invest? US, China, Singapore, bond, or crypto? 3 years horizon. 3 years. Buy and hold for 3 years. Which market you will choose? So a lot of A. Got B. 3 years. 3 years. Not this year only. 3 years. Which market will you invest in? Which market? Which market? B. Wow. A lot of people like China in 3 years. Okay, I hope you're right because I also have some money there. Right, 3 years. Now I see more B than A. Okay, more B than A. Okay, D, bond. Okay, nobody choose C. How come nobody like Singapore? 3 years, historical high possible leh. Right. After 17 years, 3 more years still haven't historical, that's 20 years, Oh, jialat, Right. B. So how about Kelvin? Which one will you choose? Three
I chose
years.
A. I
You
chose
choose A.
A.
Okay, so Kelvin choose A. Okay, US. I will tell you the right answer after 3 years. Okay, that's why you need to follow HWP page. All right, because 3 years later we are going to do another live to tell the right answer. Okay, so if you like what we do, okay, like this post, like our page. Okay, our job is to engage. Okay, we doing this session is we are spending our evening to do this. Right, it's not to sell any products. Okay, we are here to update you what's happening in the market. Okay, and of course share our view lah. Yeah, so for me, 3 years, I think I'll have more weightage for China market. Okay, I think unlikely China market will crash another 3 years. Already crashed 5 years. Cannot be crashed 3 more years. Okay, that's my view. Okay, so now about last one. Okay, not last one. There's one more. Okay, which is like 5 years. Is it 5 years? Long term. Okay, I just put long term. Buy and hold forever until you retire, until you want to take out the money when you need it, right? Which market will choose? A, B, C, D, E. More than 5 years. Kelvin always US market. All right. All right. I mean, of course, if you choose US market all the way, of course you outperform the rest. Okay, but we are talking about looking forward. Okay, like what Kelvin said, what happened in the past you cannot change. Look forward, right? Look forward, future, see future. Can see or not? Can see or not? All right. Which market? C. Someone choose C.
Oh,
I
who's
hope
that
you're
person?
right.
Oh, two people choose
Got two.
C, is
Okay,
it?
long
Wow,
term, got people choose C. Okay, that's good. Okay, you are very optimistic
that's a fresh
about
perspective.
Singapore market. And I can see many of you are practical comment. That's good. That means you are following. Okay. Not if not, we are talking. We don't do this for what. All right. I think long term, more than 5 years. I got one chart for you. That is from Kelvin one. He actually showed this chart. If you invest for long term, do you know which is the best performing market? If you invest for more than 5 years, this is the return. Okay. So past 5 years, if you invest in Bitcoin, you make 1,825% return. This is Nasdaq, right? Nasdaq 143%, not bad, 143. S&P 81%. Gold, we never discussed gold much today. It's 62%. Hang Seng is down by 42%. So does this mean that you must 100% in Bitcoin? Cannot, you cannot take it. Wow, if you invest 100% in Bitcoin, I don't know from here to here what will happen to you. Your 1,600% become 400%. Wow, jialat, you got no mood to work, no mood to do anything, right? That's why, I mean, of course, historical return is like this, okay, but doesn't mean you should all into one asset class, right? Especially crypto, right? This can happen in a day, Right? Suddenly your 1 million become 200,000. I don't know what will happen to you, right? Or until here, probably you sell already, right? Then we go up another 20%, well, you cannot take it. Oh, why I sell, okay, cannot do anything, right? Okay. So that's why I always talk about asset allocation. Don't be overweight to any of the market. Okay. Okay, so maybe I just do a quick conclusion to this sharing. Okay, I think what just now Kavya also said something is right. When we meet our investor, our client, right? A lot of them always say, "I want to buy when market is at a low and sell when market is high." Okay, I mean everyone want to do this. Okay, but a lot of time the reality is for most of the investor, they buy when everyone is buying, which is at the top, right? Like a lot of investors ask us, should I buy into US market, right? Because why? They ask why. Oh, because now historical high, a lot of people make money, right? Then they buy historical high, right? And they sell is like, oh, when market crash, when there's a pullback, right? News start to say that, oh, there's a recession coming, market cannot recover, then they start to sell, right? So that is a reality that we face. Okay, that's why advisor like us, we try to provide guidance, all right, so that when market is low, we try not to tell you to sell. Okay, in fact, we hope you can hold or add on some investment to average down your cost, right? So that is our job, right? But we actually have the other way to do it is you can just do a simple dollar cost averaging. Okay, you just buy the same amount every month or every quarter with the same dollars. When market is high, you buy lesser unit. When market is low, you buy more unit. So on average, your average cost will be lower. Okay, and you sell when everyone say, oh, now historical high, you sell. Okay, so that is to us, that is a easiest way to invest without adding your own emotion. Okay, especially most of us are so busy in our life, right? We don't know where it's high, where it's low. Might as well just do the dollar cost averaging. Okay, yeah. So for us as a team, Holistic Wealth Panel, we actually design a model portfolio for our investor. And this is my own portfolio. This is my own money, real money. Okay, so we actually make about 7.92% per year return over the past 7 years. Okay, from 2015 to 2021. This is the actual return. Okay, of course, I never make 1,000% return. Okay, yeah, because I won't put like 196,000 into crypto, right? $960 I'll put 96,000 I won't put into crypto, right? So that's why I'm able to do this. In fact, I'm still doing the dollar coverage into this portfolio because this is my one of my core allocation, right? That I want to build for my retirement. Okay, yeah. So when our client come to us, we also so-called mirror or so-called duplicate our model portfolio for them, right? And this is the other real example. Okay, 11% per year, right? This is 8% per year. But I mean, of course, the return could be different because of different entry and exit timing, right? But the allocation is the same. Okay, so that is how we help our client to invest. Okay, duplicating our own model portfolio to our client, right? This is for capital gain. All right. The other and also can use CPF. Okay, especially now I mean CPF SA could be closed. I mean not could be, okay, will be closed next year. So some of you may want to invest on CPF. We also can do this in the model portfolio as well. Right. And of course, some of you are nearer to retirement. You want to cash out your you want to invest for dividend. We also have a dividend portfolio, right? Like this. Okay, more into dividend yield, right? Yeah. So if you put about 112,000, you can get about $500 per month. Okay, which is about 6% dividend yield. Okay, and this one mainly into bonds, right? Yeah. So this is another real example. Okay, for dividend, right? 6+% dividend yield. Okay, this one also 6+%, right? Same allocation. Okay, so this is another model portfolio for dividend yield, right? Yeah. So this is what we do, right? As a team, we have two model portfolio. Okay, one is for capital gain. Target is to achieve 8% per year return, 70% equity, 30% bond. This is for those who want to accumulate for capital gain, right? If you want to invest for dividend to collect passive income, then we have the other portfolio for passive income, 6+% dividend yield, more into bonds or less into equity, right? As a team, we have more than 50 million invested, all right, from all different clients, but they're all investing in the same model portfolio. We provide ongoing monitoring and monthly updates, all right, and also a personalized portfolio reports. Okay, and this is very important, okay, because dollar cost averaging, a lot of people know how to do it, but they don't know exactly how to execute it and how to hold through the market fluctuation, right? That's why when advisor do this for you, we actually provide guidance and updates for you. Okay, so if you like us to do this for you, can just scan this QR code or just talk to the advisor that invite you to this sharing, right? Then they will explain to you how we can create this portfolio for you. All right. So disclaimer, okay, whatever we share today is really just for sharing. That's why it's called market talk. Okay, not market advice, right? It's talk. Okay, talk only. Yeah. So anything not sure, just talk to your advisor. Okay. Yeah. So 3 more minutes. Kelvin, you anyone any other thing to share?
I'm good. Nothing much. I hope you all benefited at least from the sharing, get more insights. Like Louis said, anything, always feel free to just chat with us. Yeah.
Okay. Thank you, everyone. All right. Like this post. Okay. I think it will be recorded. Okay. Once it's end, it will become a video. Okay. Do like this post. Like our page. Share with your friends. All right. If you know the response is good, we'll continue to do this kind of updates. Probably every quarter or every year. We'll see what's the response. Okay.
Yeah. If it's also possible,
Yeah.
to give us a feedback. You know what you like to see more, what you like to be included, so that we can be more targeted in our approach also. So yeah, we're here to help you all. So if there's anything you want to be covering, let us know. We'll be more than happy to cover it. Yep.
Yep. Correct. All right. Just talk to your advisor. All right. Thank you, everyone. And good night. Bye bye.
Good night.